Good afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, Malaysian semiconductor stocks staged a strong rally at the opening bell today, following a broader regional tech surge triggered by Microsoft blockbusting quarterly earnings, which helped ease market fears over an artificial intelligence spending bubble. Bursa Malaysia's technology sector jumped 4% overall as traders aggressively accumulated semiconductor equipment and assembly counters. Front-end and automated test equipment manufacturer Vitrox led the gainers, surging 1 ringgit and 18 cent to 9 ringgit and 18 cent. Outsourced semiconductor assembly player Unisem gained 20 cent to 4 ringgit and 82 cent, while Pentamaster climbed 19 cent to 5 ringgit and 19 cent. The upbeat momentum across local technology plays stands in stark contrast to the benchmark FBM KLCI, which dipped marginally to 1,719.55 in early trade. Across the region, tech-heavy markets surged dramatically, with South Korea's Kospi climbing 15% and Japan's Nikkei advancing over 5% ahead of the Bank of Japan's key interest rate decision. Looking ahead, Apex Securities noted that investors will continue monitoring upcoming quarterly results from tech titans Amazon and Apple to see if the AI investment theme sustains its momentum. On the domestic front, market participants are also weighing short-term political developments ahead of Saturday's Negeri Sembilan state election. Meanwhile, Brent crude futures held below the $90 per barrel level, reflecting a cautious pause in energy markets following a temporary halt in U.S. military strikes against Iran. Moving on to our local currency and foreign exchange. The Malaysian ringgit opened higher against the US dollar this morning as weaker than expected economic data from the United States weigh on the greenback. At 8 a.m., the local currency strengthened to 4.0800 or 4.0885 against the US dollar from Thursday's close of 4.0875 or 4.0930. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid noted that the US dollar index dropped 1.01% to 99.864 points, following reports that second quarter US GDP growth expanded by 1.5%, coming in below market forecast of 2.1%. Additionally, the Federal Reserve preferred inflation metric, the Personal Consumption Expenditures Price Index, eased to 3.7% in June from 4.1% in May. Dr. Afzal Nizam highlighted that slowing growth alongside moderating inflation supports the Federal Reserve stance to hold interest rates steady, reducing momentum for the dollar and keeping the ringgit supported within an expected trading band of 4.07 to 4.08 today. Despite gains against the greenback, the ringgit traded lower against major global currencies. It slipped against the Japanese yen to 2.5465 or 2.5520, eased against the euro to 4.7014 or 4.7112, and fell against the British pound to 5.4917 or 5.5031. Across regional currencies, performance remained mixed. The ringgit appreciated against the Indonesian rupiah to 225.2 or 225.8 and the Philippine peso to 6.62 or 6.64. However, it traded lower vis-a-vis the Singapore dollar at 3.1820 or 3.1892 and softened against the Thai baht to 12.2225 or 12.2546. Now for some economic news. Malaysia's tourism and hospitality sectors are gearing up for a major economic boost following confirmation by Formula One and the FIA that the Sepang International Circuit will host the Formula One Gulf Air Bahrain Grand Prix from October 2nd to 4th. The announcement marks the return of world-class Formula One racing to Malaysian soil for the first time since the event was last held at Sepang in 2017. According to the Malaysian Association of Tour and Travel Agents, or MATA, the return of Formula One is expected to attract tens of thousands of international visitors. Tapping into Formula One's global fan base of over 800 million people worldwide, MATA President Nigel Wong Chun Tai highlighted that motorsport tourists represent a premium high-value demographic. Unlike standard leisure travelers, motorsport fans typically demonstrate higher spending power across premium accommodation, fine dining, race merchandise, and corporate hospitality packages. The timing of the race weekend aligns closely with the ongoing Visit Malaysia Year 2026 campaign. Backed by over 700 million ringgit in government funding and for global marketing and promotional initiative, VMY 2026 again aims to welcome 47 million foreign tourist arrivals and generate 329 billion ringgit in tourism receipts. Industry stakeholders view the October Grand Prix as a key anchor event to help achieve these ambitious national targets. To maximize the economic impact, tourism operators are developing extended pre- and post-travel packages. MATA notes that racegoers, team crews, media, and corporate delegates frequently extend their stays beyond the circuit to explore major destinations across Malaysia, including Kuala Lumpur, Penang, Langkawi, Sabah, and Sarawak. This extended footprint creates immediate supply chain benefits for airlines, hotel operators, car rental services, local attractions, and retail businesses. Beyond direct visitor spending, business leaders emphasize that successfully hosting the Grand Prix reinforces Malaysia's reputation as a premier destination for international sports and trade exhibitions, unlocking broader corporate tourism and investment opportunities beyond 2026. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. Lembaga Tabung Haji has resolved 12.6 billion ringgit in historical investment losses under its long-term recovery and restructuring roadmap. According to an official statement issued by the Pilgrimage Fund, 10 billion ringgit was addressed through its initial 2018 recovery plan, while the remaining 2.6 billion ringgit was recognized progressively through asset impairments through the end of 2025. The institution emphasized that without the government's intervention in late 2018, Tabung Haji would have breached the Tabung Haji Act by being unable to declare a profit distribution. That outcome risked triggering forced asset sales at distressed market prices and a subsequent panic withdrawal by depositors. To eliminate the deficit between assets and liabilities, Special Purpose Vehicle Urus Harta Jamaah SDN-BHD acquired underperforming assets carrying a book value of 9.7 billion ringgit for 19.9 billion ringgit, financed through government-backed sukuk issuance. Demonstrating a disciplined approach to asset reacquisition, Tabung Haji has selectively repurchased high-value assets from Urus Harta Jamaah that align with its current investment criteria. This includes repurchasing a prime parcel of land in the Tun Razak Exchange for 270 million ringgit, substantially below its original 400 million ringgit sale price, as well as an oil palm plantation for 695 million ringgit compared to its original 800 million ringgit valuation. With its balance sheet cleaned up and financial reserve being rebuilt, Tabung Haji's annual profit distribution has steadily strengthened, rising from 1.25% in 2018 to 3.25% for 2024 and 3.5% for 2025. Up next, we have an energy update. Tenaga Nasional Berhad's United Kingdom renewable energy arm, Vantage RE, is set to play an increasingly central role in supporting the utility giant's long-term energy transition strategy. Following a recent site visit, RHB Research highlighted that Vantage RE currently owns and operates 908 megawatts of renewable energy capacity across 94 wind and solar installations in the UK and Ireland. While the UK division currently contributes about 2% to TNB's core earnings, it holds high strategic value as Tenaga targets increasing its overall renewable energy generation mix from 23% to 49% by 2030. Since its establishment in 2021, Vantage RE has more than doubled its operational capacity backed by long-term contracts that lock in stable cash flows for 60% of its revenue. Looking ahead, management holds an additional 360 megawatt pipeline comprising onshore wind and battery energy storage projects. RHB Research estimates this pipeline will expand Vantage RE's overall capacity by 40% to 1.2 gigawatts by the end of 2030, positioning the UK subsidiary to account for 12% of TNB's total global renewable energy portfolio. Key performing operational assets include the 28.5 megawatt Whiteside Hill onshore wind farm in Scotland, which operates at an above average 42% capacity factor, and the newly commissioned 35 megawatt peak Eastfields solar farm in Warwickshire, which uses single axis tracking technology to boost output by up to 20%. RHB Research maintained its buy rating on Tenaga Nasional with a target price of 16 ringgit and 50 cents per share. Analysts value TNB's international renewable energy business at 1.6 billion ringgit and consider the group a primary beneficiary of Malaysia's national energy transition roadmap. TNB is scheduled to announced its second quarter 2026 financial results on August 27th. Today's major corporate developments and deals across Malaysia. Starting with technology and semiconductors, Vitrox Corporation Berhad delivered an exceptional second quarter result. Net profit for the second quarter of financial year 2026 surged over threefold to 85 million ringgit, up from 28.1 million ringgit a year ago. Top-line revenue more than doubled to 374.9 million ringgit, driven by explosive demand for artificial intelligence infrastructure, automated inspection equipment, and high-bandwidth memory testing solutions. Strong operational scaling and tax incentive further bolstered net margins. Moving to the capital markets, exchange operator Bursa Malaysia Berhad reported a 26% increase in second quarter net profit to 71.78 million ringgit, supported by a 35% jump in average daily trading values and robust initial public offering momentum. In light of a strong fundraising pipeline, Bursa Malaysia raised its full year 2026 new listing market capitalization target to 34 billion ringgit and declared an interim dividend of 16.5 cents per share. In industrial diversification, Texchem Resources Berhad achieved its highest quarterly earnings in more than 4 years for the second quarter of financial year 2026, supported by improved revenue streams across all major operating business segments. Turning to real estate investment trusts and hospitality, YTL Hospitality REIT saw its fourth quarter net property income rise 3.5% to 66.19 million ringgit, lifted by new rental income contributions following the lease commencements of AC Hotel Puchong. Conversely, Axis REIT recorded a minor 4.5% drop in second quarter net property income to 75.53 million ringgit as property operating expenses increase. In property developments, EcoFirst Consolidated Berhad saw its fourth quarter net profit ease to 485,000 ringgit, down from 14.24 million ringgit a year earlier, primarily due to lower progress billing recognition from its KL48 development project. Finally, British American Tobacco Malaysia Berhad reported a 79.1% drop in second quarter net profit to 10.64 million ringgit, weighed down by higher operating expenditures closing the quarter. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.